Before money existed, people relied on the barter system. If a farmer had excess grain and needed cloth, they would trade directly with a weaver. While this worked in small communities, it had its limitations. What if the weaver didn't need grain? The lack of a universal medium of exchange often made trade inefficient and complicated. The word barter comes from the Old French term barter, which means to trade or cheat, reflecting how complex and risky these transactions could be. To overcome the challenges of barter, societies began using commodity money, items that had intrinsic value. Cowrie shells in Asia, salt in Africa, and metal objects in Mesopotamia became early forms of money. By assigning a standard value to these commodities, trade became easier and more reliable. Did you know that in ancient Rome, soldiers were often paid in salt, which is where the word salary comes from? Around 600 BCE, the first metal coins were minted in the Kingdom of Lydia. These coins were made of electrum, a natural alloy of gold and silver, and marked the transition from barter and commodity money to standardized currency. Coins quickly spread across the ancient world, becoming symbols of wealth and power. The word money comes from the Roman temple of Juno Moneta, where coins were minted in ancient Rome. The next major evolution came in China during the Tang Dynasty, 7th century CE, and gained widespread use under the Song Dynasty. Paper money was initially used by merchants as promissory notes, but it soon became a government-issued currency. This innovation solved the problem of carrying heavy coins for large transactions. Marco Polo described China's use of paper money in his travels, marveling at how advanced the system was compared to Europe's reliance on coins. As trade expanded across continents, carrying large amounts of gold or silver became risky and impractical. European banks began issuing paper notes representing deposits of precious metals. These notes could be exchanged for gold on demand, laying the foundation for modern banking systems and the concept of fiat currency, money with no intrinsic value but backed by government trust. The Bank of England, established in 1694, was one of the first institutions to issue banknotes, a practice that spread globally. By the 19th century, most of the world's major economies adopted the gold standard, tying their currencies to a fixed amount of gold. This system provided stability, but it also limited economic growth. The Great Depression and World Wars led to the collapse of the gold standard, and by the 1970s, most countries had transitioned to fiat currencies. In 1971, U.S. President Richard Nixon officially ended the direct convertibility of the U.S. dollar to gold, marking the end of the gold standard era. Today, money exists in forms that would have been unimaginable to ancient traders. Credit cards, online banking, and mobile payment apps dominate daily transactions. Meanwhile, cryptocurrencies like Bitcoin and Ethereum challenge traditional banking by offering decentralized digital alternatives. The evolution of money continues, reshaping economies and how we interact with value. More than 90% of the world's money exists in digital form rather than physical cash. From shells and coins to digital wallets, the evolution of money tells the story of human innovation and adaptation. As technology advances, the next chapter of money's history is still being written. What will the future hold? Cashless societies, blockchain revolutions, or something entirely new? Remember to subscribe and give this video a thumbs up. I'll see you in another tale of the history.